Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. I'd like to offer you some foreign exchange charts today. And the first one I'd like to look at is the euro against the dollar. A follow-on down yesterday to the previous session's bearish engulfing pattern, yet at the same time the action at the end of the day became a bullish white soldier as well. Now, this all ties in with the gap the market left behind back in April 2017 between 108.19 and 107.77, which today the market has dipped and finally filled in. Interestingly, today we are already on for a potential key reversal day, or at the very least, an outside day. Closing tonight below 107.80 or above 108.05 and we on for a key reversal, so watch carefully. The next chart to look at is cable, aka sterling against the US dollar. A bearish long black Mariposa yesterday as the market punched down through the medium moving average, currently 129.59, and closed significantly below it. Not the first close below this month, but the biggest one through it since October last year. The market is now approaching, once again, the key 50-cent Fibonacci line of the October to December 2019 move at 128.53. This is within a reasonable band of support, 127.65 to 130.10, though not as good looking as the overhead resistance we have from December 2019 to date. The third chart I'd like to look at is euro against sterling. A bullish long white Mariposa yesterday that effectively counters the previous session's key reversal down. This was yet another failed attempt lower, much as we saw last week and then again back in December 2019 down at 82.74, plus also back in December 2016 at 82.45. Today we've seen the market carry on a little higher, but not much so far. The next chart I'd like to look at is the US dollar against the Indian rupee. A second bullish white soldier yesterday. However, the question is whether the market action yesterday was incorrectly placed bull hammer, or a bearish hanging man, or even a bullish hanging man. This is after some contradictory and ultimately bullish action earlier in the week. Today, it earlier looked very much like it was a follow-on from a bullish hanging man pattern, until recently when we've dropped back to virtually unchanged. This is nevertheless continues the overall mildly bullish action of recent days with contradictory actions within it. Right now, the market is trying to maintain itself over the two nearby mildly bullish middle tides, currently at 71.51 and 71.60. The final chart I'd like to look at is the US dollar against the Brazilian real. A third bullish white soldier yesterday and a continued nice move up within last week's range. The market had approached the all-time high formed last week at 438.29 and shied away at the last moment. This is not negative if taken in context with the continued gradual move higher within the October 2019 to January 2020 bullish Andrews pitchfork that has been so effectively running the move up this year. The resistance overhead is the middle time, currently at 441.08 of this pitchfork, with also a projected 50% Fibonacci line nearby at 441.44. Whilst below we have the November high at support at 427.70. That is a little ahead of the lower time, which is currently at 419.78. Well, that about wraps it all up. So in the meantime, good trading.